sacrifice treasury wallet got completely emptied out, and nobody knows where did the ETH go. Been a while since we've heard that. Oh, also, AWS goes down and takes half of crypto with it. Well, heck, it even took a little bit of my stream here. I can't stream to X now because of AWS going down. And oh my goodness, what else is happening here? Holy geez, by golly, here comes well endowed Molly. It looks like we're all in trouble because the bear market just started. Even though there's a ton of money printing that's still yet to happen, and there's lots of very bullish things on the horizon and everything. But oh gosh, the 4-year cycle is just so firm, and there's just no getting around that, right? Well, we're going to investigate all of that and find out for sure. This is Reinvent Ideal. I'm Cairo Copeland, and you're watching Shut the FUD Up. All right, so everybody, let me know here if the audio is good or if it's constantly messing up, because what I've been told by some people is that apparently when I'm streaming, it doesn't, it stops and starts every couple of seconds. And oh yeah, I figured out the X connection isn't working right now. A whole bunch of stuff with X is going crazy. Y'all might have noticed here, I'm not as active on X. I don't even have the blue check mark anymore. It's not that I'm giving up or anything. Don't worry about it. I'm not abandoning you guys. It's nothing like that. The deal is just that when I first bought the premium X, when they were offering it to me one whole year for $100, and it was the biggest package they have, the super premium package. It was just $100 for the whole year. Now, for the renewal, they say, well, we want $395. Screw you. You can't quadruple the price on me and not give me anything extra. So it's not that I'm not going to be active on X or anything. I'm not going to be that active on X right now. And also, this is the holiday time. And during the holiday time, I did promise the family that I'd be more involved with the family and I wouldn't be on X arguing with a bunch of idiots and a bunch of bears. So there's that. But eventually, I'll get the blue check mark again here. I'm just... You see, here's the deal. I'm Jewish, and I like to haggle these things. And that's what I'm doing. I'm haggling. I want a better deal than what they're offering me, all right? And that is a stereotype that is 100% true, I can say, because I've lived that stereotype. In fact, one of the very first Bible stories involving Jews, Father Abraham, where God wants to destroy Sodom and Gomorrah, and he says, well, you got to find me 50 righteous people, Abraham, and then I'll spare the city. And then Abraham keeps going back to God saying, well, what if I just find 40? What if I just find 30? What if I just find 20? What if I just find 10? He's haggling with God, all right? That's how often we haggle, all right? So that's what I'm doing. I'm haggling with Elon Musk over the whole thing. So we got a couple of things here to cover here. It's not going to be too long of a stream here today because I got to save the energy up for next week. Because next week, I'm going to have a much longer stream because it's Fed Day next week. And I am going to be covering that live. When Fed Day comes around, I will be covering that and going over that with you. So, may not do too long today or too long later in the week here and everything. It's all right. Doesn't mean that I'm abandoning you guys or that I don't believe in the cause or anything. So, please, if you will, do me a favor and...
control yourself!
Don't worry. I ain't going nowhere. I mean, yeah, Noah said, oh, hey, he's taking a big risk here because what he's going to do is he's coming out being bullish when everybody else is bearish. And that is very risky. Mind you, that is very, very risky. Because if you're bearish, well, it's very easy to be bearish. All you got to do is just say, yeah, I think that the market's going to go down. Nobody's going to get mad at you if it's true because you predicted it. And if it's not true, nobody's going to get mad at you because... most people are going to be like, oh, well, hey, what he predicted wasn't true. That's good news that it wasn't true. But if you're going to be bullish right now, it's very, very dangerous to be a bullish KOL because what's going to happen then is people are going to invest based on your positivity. And then because you're positive and they invest, if it doesn't happen, then they're going to be very, very mad at you, and they're going to hunt you down and try to off you, which is a concern that like we should all be legitimately worried about. I mean, plenty of other KOLs are much more bullish than me and for much longer than me, and they've recommended coins that are a lot riskier than the ones that I've been talking about. And also, I gotta say, whenever I talk about a coin, I'm not recommending you buy it or anything. This is all for entertainment and information purposes here, so don't take anything I say as investment advice. It's not. I'm out of that business. Been out of that business for a long time. But it's very risky to come up here and talk about it and also give opinion that says, hey, I think that we should all be very bullish here because lots of good stuff is in our future. Because if that doesn't materialize, a lot of people are going to be very, very angry. Now, what else I've said, and I'll say it again here, is if the bullish stuff doesn't materialize, well, that's extra bad news because what that means is that means crypto's dead forever. It absolutely means that. Y'all think there'd be another cycle if this was the end of this cycle? I mean, Ethereum could do what? 25% after 4 years? No, not even 25%. I mean, it did like, what, 3% off of its previous top. Maybe work out the math there real quick here. Sorry, I know I'm like so unprepared here. How to be a professional YouTuber. Let's see. It gained like $100 off of its previous high. Yeah, that means that Ethereum only did 2% after 4 years. 4 years in Ethereum just to do 2%. Nobody's ever going to invest in that ever again if this was the end. So that's how I know this is not the end. Because even people who don't care about the price, like the Ethereum Foundation, even they would be horrifically embarrassed by that. All right, I see a lot of y'all are here. I see Kent, I see Kirill the Thrill, Armando, Good Times in Gold, NJ Dub. A lot of people that are you normally here, they're not here because like my X stream is not working, my connection to X here and everything. But maybe it gives us better quality here on YouTube because like this tool that I got here for streaming on Rumble, it apparently has got lesser quality with like the more sources to stream to. I probably should do away with Kick because like I can't even see how many people are watching on Kick, and yeah, I don't get much interaction on there. But I'm trying to be everywhere, that I could. So I probably should do away with Kick, just do like X, Rumble, and YouTube. But hey, we'll give it a little bit longer here. Anywho, we got a ton of stuff to look at today. Let's start with the stuff that I usually look at. Let's start with the stuff that always catches our eye and we always got to review. How is the market doing today? Well, remember, over the weekend or on Friday, everybody thought it was all over because Bitcoin was down to like, what, 106? I think it got down to at least 106 there. Everybody seriously believed, it's all over. And the bear market is here. I mean, just 24 hours ago or a day ago, when was this here? Yeah, 8 p.m. last night, it was down at 107. And let's see, I think that it was even lower too, though. I think, yeah, here it is. That's right. Yesterday morning, I remember waking up to this. It was 106,000. Now it is at 111,000. I think it's still negative on the month, though, because, like, where did we start October at? We started it at about 114,000. So we're negative on the month. And we only got about 11 days left to have a positive October. But this is very nice here to be making up some ground here to go from where we were back up to 111,250. Let's hope that it can go over like 112,000 right there because I think it liquidates some shorts in that case when we do that. Ethereum back over 4,000, but that's nothing to really smile about because it's been jumping up above 4,000 all day today and then falling right back down below and constantly embarrassing itself. Man, Ethereum, here's how I look at Ethereum right here. I'm like, when I was a stripper, there was this one older gentleman working at the strip club who you could tell he was old because he was slowing down, constantly out of breath, getting out of shape. He would jump on the pole and he would not be busting out great moves. You could see the sweat just dripping right out of him immediately because he got exhausted after like probably 15 seconds of spinning. And it's just like, oh man, everybody's just got to take this poor old horse out behind the shed and put him out of his misery. That's what Ethereum is like here. It's like the uh, outdated old age stripper that really needs to hang up the boots. The rest of what we got going on here, though, let's see. Anything really stand out? Well, Chainlink is having a good day, but really it's just going back to where it was here, so not too impressive. Not too much is having a real standout here. I've noticed that this ASI, or what was once Fetch AI, that's gotten beaten down pretty bad. It's gotten like a really big beat down here. I mean, down 26 on the week, down 5% today. Wonder what's happening with that there. I mean, could be the deal that like a lot of the AI storylines are not playing out as expected. I mean, that's certainly the case with Filecoin, why that one's down 99%. Oh, yeah, ASI is down 92%. I don't think that lasts forever, though. Yeah, I think that over on the far right, you guys see from the all-time high, I think in the real bull run, all of that red goes away. In the real bull run. I'll talk a little bit about that today here as far as what's going to cause it. BAT is taking a breather. Basic attention token. That had been like the one that had been doing pretty good throughout all of this drama. But it's succumbing to the overarching force that is keeping altcoins down and kicking it in between the legs here. Now, let's talk about these assets here. The Pulsechain ecosystem assets. Hit refresh. We got a little bit of green going on here, and a lot of that green is just due to speculation over what's going to happen with the origin, or not the origin address, the SAC address money that all disappeared. I got some thoughts to share with everybody about that. We'll talk about those here. What do I think is going on with the SAC wallet? But for the most part, it's not having too great of an effect on the price yet, which I don't really expect it to. I don't expect the money from one address to other addresses. That's not as meaningful as, say, moving it into some of these assets and actually buying some of this stuff up here. NJW asking about Illuvium. Let's take a look at Illuvium. Yeah, GameFi has been beaten down the most here. Like, you guys think we got it bad here in Pulsechain? GameFi has had it the worst this whole cycle. Nothing's performed worse than GameFi this cycle, I don't think. And let's see. Didn't go below $10 here, so it's at $11.05. I remember like my entry price into Illuvium was somewhere around there in the $10 mark. So this is a good price to be buying in here at it. I think probably GameFi would be the last thing that pops in the whole crypto market. Like the last thing to go up would be GameFi, just because of like how highly discretionary it is. I mean, like, we got to be experiencing really good times for people to be caring about gaming. All right. Taking a look here at the stories. I think we do have some stories that we should care about here. Let's see. The stocks have closed up here. Oh, and also, like, I'm noticing this happening a lot on some of these days here where, like, once the stock market closes, well, then crypto starts going back up, or at least Bitcoin. Looks like that's going to be true here again today. So, like, if we're having a crummy day, kind of wait till after the stock market closes at 4 p.m. It seems like the day kind of improves a little bit here. I'm not so sure why that is. But here's the interesting story of the day here is U.S. and Australia signed critical minerals agreement with 8.5 billion project pipeline. And this, I think, is to combat the dependency that the United States has on China with what are called the rare earths, or rare earth materials, which actually are not that rare, I've come to find. And like, while there's a shortage of them right now, it is going to lead to this great big glut of way too many rare earths in our possession right here. So this problem that we got going on with China, it's a temporary problem. It's not something to worry about here. It's not going to keep the market down for too long. And 2 years from now, it's all good. I mean, it'll all be forgotten about probably in a few months from now, but it will definitely be totally forgotten about way back. It'll definitely be forgotten about 2 years from now. So the deal is that Albanese, Prime Minister Albanese said there will be 3 groups of joint projects between the two countries, which will include companies such as Alcoa. The U.S. will invest in rare earths processing in Australia. All right. Well, let's see. What else can we throw onto the deal here? Can we get KDP to come back? Because if you can get KDP to come back here, then that's like the best deal that you can possibly get out there. Because yeah, she's still out there somewhere in Australia, even though nobody's heard from her for a very long time. But man, if we could get her back, that'd be great for the ecosystem. All right. So, any other stories from CNBS, mainstream financial press? Don't think so. And yeah, there's the AWS story here, but yeah, what do we really got to say here about AWS other than, hey, it's a great thing we're in Pulsechain. It's a great thing. We don't have the problems that you other people have. We're doing just fine. Whereas everything else is really sucking. Like you can't use Coinbase, you can't use Uphold. I couldn't even use MetaMask earlier because like my MetaMask was signed into Ethereum, and Ethereum is dependent on AWS. So it's Bitcoin, Ethereum, Polygon, and then most of the other trading platforms have dependency on AWS. Man, it really sucks for them. Really, really sucks. All right, Archie is here. Sunlight is here. Oh, yeah. Fed meeting tomorrow, or a Fed conference about crypto, which they could be talking about digital dollars. I think it'd be largely about stablecoins and the implementation of the Genius Act, because the crypto market structure bill is still kind of being written and still kind of being deliberated on. They haven't had a cloture vote on it even. But I do think that like the market structure bill will be coming in November and getting voted on. Oh, why are they doing that? Why would they even bother when it's all over? Yeah, we're about to get a market structure bill, something that we've never had before, and people want to say that it's all over. Mm-hmm. What other stories do we have here? Oh yeah, I got to look at the DXY. What is Gotta check our DXY here. Where's currencies? Is that in here somewhere? Don't think it is. Let's search it. There we go. Dollar index is actually up today, surprisingly. You see, all that talk of like the debasement trade, and the dollar is actually getting stronger. I think the chart's not loading because they probably depend on AWS. But yeah, all this talk about debasement's not happening. The dollar is getting stronger, which is very interesting. I mean, the reason why is because currencies worldwide are collapsing, or not really collapsing, but they're not doing well. They are getting weaker and weaker, particularly the Chinese yuan. That's mainly what's driving the dollar bill up, because China's doing all the money printing right now. They're the only ones doing money printing. And so what that's doing is that's causing the U.S. dollar bill to get stronger in comparison to other fiat currencies. Not so much in comparison to financial assets, though, like stocks and, of course, gold. And here's something else that's interesting here, or something that we've been waiting a long, long time for is finally occurring. Well, looky here! How about that? The 10-year Treasury, not only is it down lower than 4%, not only is it finally cracked 4%, it has actually gotten to 3.97. That's right, 3.97. This is great. It is great here to see 3.97. Hang on a second. Getting a spam text here. You guys might be getting this spam text here to yourselves, and you can tell it's spam just from the number. It says, your Coinbase withdrawal code is this, which you know is crap because Coinbase doesn't send codes by text messages. So I'm gonna harass that person a little bit later. I'm gonna tell them something. See, whenever I get telemarketers or something on the phone, what I do is I sexually harass them and make them very uncomfortable and squeamish because it's fun to do that. But whenever I get text messages, maybe a person doesn't even see it. It's probably all ran by like an Autobot that's running it. I'm gonna play around with that later today here when I finish the stream. But this is great news here that the interest rates are coming down, which I think all it is that it's just front running the interest rate cut that will be coming on the 29th, which I will be broadcasting and covering simultaneously with Pal's press conference. I'll be on the air discussing it with everyone. But here's all the confirmation you need to know that there will be a rate cut at the end of this month. Because if the 10-year Treasury is going down, it's because it's going down like 10 days in advance because they do expect that rate cut. And that rate cut would bring it to, where would it go? Let's check. What's the current federal funds rate? And watch CME tool. Hang on. For some reason, no matter how many times I set Chrome to make the default search engine Bing, they keep setting it all the way back to stupid Yahoo, which nobody uses these days. As a current rate target is 4 to 4.25. That would make it at least 3.75 to 4%, which that makes sense then why the 10-year Treasury rate is at 3.97. All right. Now, another thing here before we get into more of today's stories, I want to say if you want a copy of this book here for free, I'll give you a copy of this book here for free. It's called Your Parents Are Wrong, Debunking and Replacing Outdated Advice. You want to know something that your parents were all wrong about? Your parents were probably all wrong about saying something like, oh, hey, you should invest in a very well-diversified portfolio of stocks and bonds. Because if you did that, you'd be pretty upset here because bonds have done nothing but suck for the past 5 years. All they have done is suck. Even with these interest rate cuts, that should make bond prices go up, but they're not going up. So your allocation to bonds would do nothing but lose money. Because it was true back in your parents' day that if you invested in stocks and bonds, well, when one went up, the other went down. And when one went down, the other went up. It was a very reliable negative correlation relationship. And it kind of served as like stocks where you gas pedal and bonds where you brake pedal. And it was good because then you had some rebalancing opportunities. You could protect money while growing it at the same time. That's no longer true. COVID's crashes has shown us that both of these things will go down at the same time, and only one of them has recovered. See, I think right now what's a better brake pedal for you is gold. If you took all your money out of bonds and you stuffed it into gold, you'd be doing a lot better because it's very unusual. It's very strange for both stocks and gold to be going up at the same time. I can't really think of a time in history when that's happened, other than the massive money printing that occurred as a response to the pandemic. But anyways, if you want a copy of this book for free, I will give you a copy of this book for free. All you got to do is just head on over to my Substack. That's reinventideal.substack.com. Reinventideal.substack.com. I meant to release a new post on here. I'm going to probably release it tomorrow. Have a new post up. And all you got to do is head to my Substack and click here where it says free gift. Then you scroll down and you click here and you sign up. It costs you absolutely nothing to sign up. Absolutely nothing. It's all 100% free and you get a free copy of my book when you sign up. And that is my way of saying thank you just for listening to this stream here. Now, another story to cover. My girlfriend, Sine Takeshi, is moving on up in the world. That's right. Not quite prime minister yet, But she is moving up, and yes, I am 100% dead serious about her being my girlfriend or my girl crush or whatever you want to call it, man. Like, I'm just containing so much drool right back here. I mean, I don't even care if she's 64 years old, man. She looked good for a 64-year-old woman because I tell you, man, if she's going to get the Bank of Japan to start printing money over and over and over again and keep that money printer on, well, then, hey, Takeshi, you can call me anything you want. I will give you the best lap dance of your life. I will get on that pole and spin around as much as possible. And yeah, when I'm around her, there's gonna need to be like a whole bunch of bodyguards or the Japanese Secret Service, and they're all gonna need to be screaming in my ear the following.
Control yourself!
But no, you guys, I want you to understand this is serious here. This is true love. And here's the proof of it. I actually wrote I wrote a song for Sine here, and I'm gonna play it for you guys. Let's see if I can get this strap stay on here. Yeah, dead serious about this, y'all. Like if somebody can clip this and somehow send it to Sine Takeshi, well, hey, you're like my new best friend if you can do that. Because this really needs to get out there. I really need her to have the encouragement from me to do what needs to be done. So here's a little song that I wrote for you, Sine, if you're listening. I keep a close watch on this crush of mine. I look at bond yield spreads all the time. I keep the yen carry trade to which we bind. Wish you were mine. It's not a crime. Find it very, very easy to be true. I find myself alone when each day's through. Yes, I'll admit that I'm a fool for you. Because you're mine, I walk the line. Oh, come to me, Sine. As sure as night is dark and day is light, I keep you on my mind both day and night. That happiness I know proves that it's right. Because you're mine, I walk the line. All right, enough of that. So y'all clip that and make sure you send that to Sine Takeshi. And let her know, oh, Sine, my heart belongs to you if you just get that Japanese BOJ money printer on. In all seriousness, which I was dead serious the whole darn time, Ryan, do I got any Megadeth? You know, I might be able to play some Megadeth here. I'd have to get on my electric guitar for that. But where was I with this story here? Yeah, so this story here is basically saying that she is on track to become Japan's first woman prime minister after her governing party secured a crucial coalition partner, which the partner was from the Kamito party. That's right. You see, in Japan, well, they've got everything. It's a little different out there with their kind of parliamentary form of government. But basically, she's moving up from the ranks, and it seems very, very likely she is going to be the prime minister, which is exactly what we want. So even though they say, well, she's the leader of the liberal Democratic Party, over here in America, that actually translates to conservative. They say, well, that's ultra conservative politics, is what they have over there. Or at least that's the direction that party is taking. I mean, like, hey, give me that any day. Where like the liberal Democrats are considered very conservative. Oh man, Takeshi, look at me in your nice black businesswoman dress here. Oh, and she wears the hose too, right here. Yeah, you can please be wearing that when I meet you. So we got a new coalition, still a minority in the legislature. Here's what's interesting here is that she is actually very unpopular among women, so they say. Which, hey, that's good. That's good because Japanese women are kind of like American women in the sense that they vote more for the they vote more for the left. So if she's not popular among the left, well, that tells me all I need to know here as far as why I want her to win here and why I myself would vote for her. So what's somebody say here? The prospect of a first female prime minister doesn't make me happy, says sociologist and probably socialist Chizuko Ueno. Ueno said that Takeshi's leadership would elevate Japan's gender equality ranking, but that doesn't mean Japanese politics becomes kinder to women. I don't know. I think that my view of Japanese women will actually go up if Takeshi becomes prime minister out there. Yeah, because I got a huge crush on Takeshi, and if she is the woman that is going to be in charge out there, I'm gonna have my heart eyes on every time I look at Japan, right? Yeah. You got those big red hearts for eyeballs and everything. So Takeshi supports the imperial family's male-only succession. Oh, that's why the chicks don't like her. Opposes same-sex marriage. Oh my! How dare she? How dare she? She's not into like the whole woke mind virus phenomenon here and everything. Oh, and here's the worst of it. It wants a revision to the civil law allowing separate last names for married couples so women don't get. There was a law that they passed that had women pressured. They said, well, it pressures women into abandoning their maiden names when they get married. We don't want that. So we're going to create a law that says they can keep their maiden names. And Takeshi opposes that law. Oh, man, that's my girl there. Yep. So Takeshi, that also means you're going to need to be, you're going to be changing your name to Sine Copeland. All right. I hope you're ready for that here. Hope you're ready for it. But here's what's happening over in Japan. You know all about the population decline out there in Japan. It's a problem for them because of the way their economy is set up. See, I say that populations don't matter. That'd probably be a Substack I write there. Populations don't matter, but when you have socialism in your economy, that does become a problem where you are dependent on the population. And her policy her policy plans are going to be focusing on things like short-term measures to battle rising prices and to improve salaries, subsidies. So a bit socialist there. But also, what she wants to do is be very traditional, be very protectionist, wants to cut down on immigration to Japan, and wants to increase the spending out there, and wants to run the money printer and lower the interest rates. And she's pushing the Liberal Democratic Party to the right. So, lots of good things coming from Japan because of my girl, Sane Takeshi. Hopefully, everything goes according to plan, and she gets into power, turns the BOJ's money printer on, and then by the time that happens, we got our money printer going, and the ECB's got their money printer going because by then France will have collapsed, and they're going to have to do something about that. But we'll see. We'll talk a little bit about the money printer here today. But we know what the number one story is here today. Let me see if I can pull it up here, find it. I don't think I need to pull it up or anything. Y'all know what the number one story is. It's the origin or the sacrifice address has left the building. The sacrifice address has moved all of its money out of it's out of the address and it's moved into a bunch of other addresses. Nobody knows what's going to be done with it. Nobody knows. It could be that maybe Richard is making off with the money, he's pocketing it, and next up what he's going to do is he's going to delete his ex profile, which is the only contact that we have from him. Maybe he leaves behind us a message that says, hey, screw you guys. All the money is mine. If y'all weren't such jerks and didn't act like a bunch of whiny, complaining little idiots the whole time that the price was struggling in the bear market, well, then maybe I would have pumped the prices with the origin money, with the sacrifice money. But because y'all acted so horrible, I'm leaving. If I was Richard, that's what I'd be doing. I'm being honest with you. Like, I don't understand, the disrespecting the founder, disrespecting Richard. What good do you think that does for the ecosystem? I mean, do you think that is going to help anything at all? Do you think you think that he would be like, oh, I'm so glad that they called me out. And because they called me out, you know what I'm going to do? I'm going to pump the price. No. All you're doing is you're just agitating the guy who cares about you more than anybody else in the crypto market. It's like that thing that he says right here is, if you lost your luggage at the airport and you were rude to the terminal worker, and the terminal worker says to you, hey, there's only two people that really care about you getting your luggage back. One of them is you, and the other one is starting to care a lot less because of what a jerk you're being. So here's like the story. Oh, he used cow swap. All right. Well, hey, that's the centralized. That's the DEX I use all the time here whenever I'm doing anything on Ethereum, and I highly recommend you use cow swap. It's a lot better than Uniswap. But yep, all the money is gone. And here's what I think is going on here is that he's just moving it because he's tired of everybody watching it. That's all I think it is. He's tired of all the wallet watchers and all of the speculation going on about it. And he's just moving it somewhere where y'all can't see it or you can't so easily track it. And that's it. Do I think he's going to deploy it? No, I don't think he's going to deploy it. I really don't. At least not right now. It'd be a terrible idea to do it right now. Does this mean something is coming? Well, it could mean something is coming, but we don't know. And that's all right. That's all right, because we should not be pumping the main storyline of the ecosystem. We shouldn't be pumping this storyline that, oh, yes, it's going to be successful because Richard's going to buy the tokens with the sacrifice wallet. Guys, are we not capable of doing fine on our own without founder intervention? I mean, how is this any different from hyper-liquid buybacks or pump.fun buybacks that everybody's relying on? Everybody's talking about buybacks. I was making anything different from XRP, which is talking about buybacks, which gets sold down immediately after they occur. But also, think about it, guys. All that we accomplished here in Pulsechain, it would totally undermine everything that was meant to be accomplished by Pulsechain, because that all means all that we did was you sent a whole bunch of money to Richard just for him to send it right back to where it came from. So I think nothing is really going to happen here with this. There's nothing to concern ourselves with yet. And it also may be that, like, if he was going to pump the price, well, he wants to do it from somewhere where y'all don't see it coming. But I don't give much weight to that theory that that's what the purpose of the SAC funds was ever for. At least not until they are in, like, some serious profit. Like, Ethereum price go up. But yeah, Ethereum price, is that going up? No, it's only made 2% after 4 years. And the way that I say that, why it only made 2% in 4 years, I'm just measuring from top of last cycle to its new high this cycle here. I don't measure these cycles from the bottom because the price that it bottoms out at, I don't consider that a true price. See, that's a panic-driven price. What I'm looking for is a price that it's closed at and held for a long time. Oh, hey, Tam, you're finally here. Yes, I was wondering when you'd show up there, but yeah, for some reason, the Twitter stream, it's not taking me over to Twitter because maybe it's because I haven't paid for the blue check mark here yet. Because I'm haggling with Twitter about the blue check mark because it's just in my nature to do that, and also they want to charge me 4 times as much as what they were charging me when I first signed up, and I'm not doing that. Ryan asks, are you more bullish now? Ryan, I will answer that here in today's stream, because I got some stuff to say about, am I bullish? Do I think it's all over? Do I think it's continuing? I will answer that, but first, a little public service announcement.
Why does crypto suddenly explode into unbelievable bull runs? only to crash just as fast. It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible.
All right, so in that book, I talk about how the debt cycle is a cause of the cause of crypto going up, or at least it factors in and plays into it here. And that was also one of the that was the cover story. That was the cover story here for The Economist, which, you know, it's a piece of garbage magazine now. But man, back in the old days, this was an incredible magazine that I would read cover to cover, every single word, because it was so well written. Everything about it was very insightful and everything. Well, they finally have a good story on here, finally, for the first time in several years, talking about the coming debt emergency. And what they're talking about there is not just the federal governments, but the debt throughout all of the public sector, meaning like also from publicly traded companies and everything. There's a big debt rollover that's still yet to occur, and that's where they think a lot of inflation is going to come from, which I would agree with as basically the cause of it. Now, I'm not going to pay The Economist $20 to read the one good article that they've written in a long time. I don't really care to do that. And oh, by the way, all you companies out there that are doing this, all of you journalism companies and everything, we got ways around it. All of you magazines and everything, like, your days are over. You either put your stuff online so that we can read it online, or you stop writing. Okay? No, we're not going to pay for an online article. We got ways around it, all right? So, if you don't like it, well, then just stop writing. But here's what it's talking about here. It's like, the article, it emphasizes that many governments are living way, way, way beyond their means, and they're going to be doing that to a much greater extent here. Like, Japan is going to do that when my girl gets in charge. France is already doing it, and most of the Eurozone as well. Brussels is where the Eurozone is governed. Like, that's where the headquarters of the European Union is and the European Council. But Brussels is extremely unpopular with the everyday European, because those Europeans, like Greece, Portugal, Spain, definitely France, all of those all of those countries out there, well, they're stereotypical liberals. All they want to do is just mooch off of the welfare state. They're going to sit at home and they're going to slack off and probably jack off to the corn. I have to say corn because we're not allowed to say the P word here on YouTube, apparently. So yeah, they're going to sit there and slack off and jack off to corn, or just scroll social media all day, or whatever else it is that they do out there. Maybe call it a wank fest out there, because that's the term that they use in Europe. Is I call them wankers, or they're wanking constantly. That's what they want to do. They don't want to work. I mean, a lot of those Italian guys and Italian people out there, what they do is, a lot of them live with their parents. And it's not because the housing is expensive out there. Like, housing is actually somewhat affordable in Italy. But it's because they don't want to pay for it, because they don't want to work, because they're lazy. And you see, laziness is probably the most powerful force, I think, in all of humanity. Nothing's more powerful than laziness. I always used to think that, like, the male sex drive was the most powerful force. But no. I mean, if it was the case, there wouldn't be any fat men. Because, you know, no woman wants to have sex with a fat man. So if the male sex drive was the most powerful force, guys wouldn't get fat and prevent them from being able to exercise that sex drive. But apparently, laziness is more powerful than the male sex drive, because that's why we have fat guys. Is they prioritize not doing anything, gluttony and sloth, and eating like a fat, disgusting pig. That's more important to them than getting laid. And that's a very common thing that's in control out there in Europe. Everybody is lazy and they don't want to work, and they're constantly voting for politicians in their their local country that are going to cater to that with welfare. Brussels, though, is saying, well, we can't keep doing this. We got to be responsible. Somebody's got to pay for all this stuff. And if you guys ain't working, well, then we're not collecting taxes and we can't pay for any of it. We could try issuing bonds, but nobody is really interested in buying them, as we've seen. And it's led to Brussels getting more unpopular, kind of like the strict parent that disciplines the kid. Matter of fact, Ursula von der Leyen is probably one of the most unpopular world leaders right now. One of the most unpopular ones, because the European Union says, well, we got to be disciplined. We got to do the right thing. But the will of the people says, no, we're not going to do that. Germany in particular is kind of like the only thing that keeps Brussels alive, because that's like the one country where they do work. They do try to do the right thing. They work and pay taxes. And it's really kind of supporting all of Europe right now. But because there's not enough tax revenue out there in the European Union, they're constantly issuing bonds and creating all of this debt. What's going to be happening in Japan is the same thing. There's going to be a lot of bonds that will be getting issued. They're going to kind of grow the government debt out there because there'll be lots of government spending. It's not because of laziness out there, though. It's just because Sine wants to be popular with the rest of the country because she's overcoming a lot of obstacles right now, just being a woman. She's got a lot of obstacles to overcome also within her own party, because it's the Liberal Democratic Party. She's a very conservative person, but she is trying to overcome all of those obstacles and become popular with everyone by basically turning on the money printer and doing a lot of free goodies and giveaways. So there'll be a lot of government debt being taken out there. China's constantly issuing all sorts of government debt and constantly printing money. They're the ones that only ones that have the money printer on right now. And then here in the United States, we're doing that too. We're constantly issuing lots of new treasury bonds. We got about 7 trillion of them that are coming due and are going to be rolled over next year. These bonds do not get paid off. They just get refunded and replaced. I believe it was last week in the spaces that Tam Tam does, where we were talking about that with the new girl, Kim, the influencer that got one of the tablets, one of the Pulsechain tablets. When I was talking to her, like, hey, the government never pays off its debt. It never pays back its bonds. It just keeps rolling it out over and over again. And the reason for that is that one man's spending is another man's income. Therefore, government spending is someone else's income. And that someone else is dependent on that government spending. And if you cut it off, that could hurt the economy, because you have people that were addicted and dependent on that spending like a drug that are now not going to have it, and they don't know what to do. They'll be like, I got to get a real job. Kind of like, the movie Ghostbusters. Like if you haven't seen Ghostbusters, I don't know what the heck's wrong with you. You got to go see it. But at the beginning of the movie Ghostbusters, like they work for a university, and they're basically pissing away a lot of alumni money on some very stupid ghost hunting stuff. And then when they get fired and they have to go out on their own, there was something that Dan Aykroyd says, where he says, like, oh, got to go to the private sector. They expect results. We can't do the private sector. Which is hilarious, because that's exactly how it is right there in the universities. And if you want a really easy job, working as a researcher for a university, because like they literally pay you money to do nothing at all. But what this is emphasizing here, what this article is all about here, is there's unsustainable debt levels. What I mean by unsustainable is just that the amount of debt that's being issued is going to be so high, the principal amount will be so high, that even a lower interest rate is going to cause so much more to be added to the debt. Like the interest is compounding because the principal is so high. Even if you lower those interest rates, still the principal is so high that the compounding is going to get greater and greater and greater. The only way that you can stop this is with inflation of the money supply or money printing, growing global M2. That's the only solution governments have because they can't do austerity out there in Europe. They can't do austerity in China. They won't be able to do it in Japan either. I mean, the Japanese people would probably be the only ones that would be able to take it like adults and be mature about it. But Sine has made too many promises to the point where she can't do that. And then here in the United States, you think that we would ever allow austerity? I mean, we tried it with the Doge, the Department of Government Efficiency, and we didn't codify any of the Doge cuts. They didn't do any of the Doge cuts. So no, there ain't no austerity ever coming. So what they're going to do is they're going to have to inflate the money supply so that the dollar bills that they have to pay in interest costs are less meaningful of a burden to the government that has to pay them. That's how they manage those debt burdens, is by increasing the money supply and devaluing the dollar, reducing the purchasing power of it, so that even though they're paying more interest, they're paying less in terms of purchasing power because the dollar has less power, or whatever currency they're paying it in. And this is all explained in my book, Decrypting Crypto. So if you want to have like a very thorough explanation for these cycles and how they play out, that book does it for you. He used a very fun analogy for it in the book, too. Now, governments have become more inventive and done more adaptations in their approaches to managing their economies. But when you rely on inflation to manage your debt, that too can lead to some very long-term consequences, very long-term problems. Because when you look at how much the money supply was inflated during the pandemic, well, we're still suffering the consequences of that right now. But what else could they do? I mean, it's hard to say. I mean, the United States is going through it. The United Kingdom's going through it. Japan, France, all of them will. And they're all unsustainable. And the potential for what we could call a debt emergency is growing and is more likely as these trends continue. And by debt emergency, that means they're going to have to switch on quantitative easing, which they do not want to do. Here's the thing about like quantitative easing. I keep showing you the federal balance sheet and how it's going down. When it goes up, well, that means they're expanding the balance sheet. That's printing money. That's quantitative easing. They do not want to do that. Nobody at the Fed really wants to do it. They may have to do it, but they don't want to. Even Stephen Moran, the guy that Trump put on there recently, even Stephen, he says he does not want that balance sheet turned on or that balance sheet expanding unless there is an emergency. And it looks like the debt could cause the emergency. So excessive government spending, rising debt levels, that was the subject of the Economist article here. And it's something to truly worry about for the government, not for you and me. You see, you and I, we're okay because we are invested in crypto. And because we are invested in crypto, when they print that money, they print those new dollar bills, that is going to cause the price of our assets to go up. And if you are looking for explanation on that, I explained it to Kim in the spaces that we did last week. Basically, I've done the illustration here for you guys several times here. When a new dollar enters the economy and it circulates and changes hands multiple times, it will eventually end up in the hands of somebody who wants to save that dollar bill. How do they save it? They can put it into investments, or they can put it into the bank, and the bank will put it into investments. And eventually, as the safe investments get all bought up, other investors have to buy risky investments to make a similar return. What's the riskiest investment with the lowest amount of liquidity and most sensitive to liquidity injections? Crypto. That's why we're in crypto. That's the whole story. All right. So that was like the first thing we wanted to talk about was this article here at The Economist. Mainstream media is finally catching up to what I've been saying. This tells you that France is in more and more trouble. The S&P ratings agency has cut the credit rating because the debt burden out there in France is growing. Now, I remember last time S&P really downgraded government, or when they downgraded the United States. I think it was 2011. I believe it was the summer of 2011. I remember that. And it went from AAA to just a AA on the U.S. government debt. Or instead of AAA plus, it went down just to AAA. Sorry, it's still AAA, but it was AAA plus. Now it's just AAA. And it was a big story that they kept talking about on the news. All of the news, too. I mean, this was during the Obama administration, who had the media in his pocket. They would never say anything bad at all about him. But even on CNBS, they were talking about this story because that's how big of a deal it is when a credit rating like this reduces or when a credit rating company reduces the rating on a sovereign government and their sovereign debt. Because it's very rare that they would do that for a sovereign federal government. All right? And this is how I know it's not all over. Everybody's thinking, well, the crypto market is all over because we set a new top on October the 6th like we were supposed to, and we haven't gone back up since then. Let's see, where are we even at right now? Oh, man, we're down to back 110,000 again. Oscillating with it all day. Ethereum is embarrassing itself again, going down below 4,000. Yeah. So right now, everything is still sucking. And all of the 4-year fundamentalists, they so far are correct. They are so far are correct. And everybody that is saying that it will go on longer, we don't have evidence of that happening yet in terms of the price, but we do have plenty of reasons to believe why the price will go up. As I said earlier here, I'm taking a great big risk. I'm not saying feel sorry for me or anything. You ain't got to feel sorry for me when I say this, but I'm taking a great big risk with my life here by telling you I think that the cycle is not over. I think the bull run hasn't even gotten started. That's risky because there's zero risk in just saying, oh yeah, it's all over, because if I'm wrong, nobody cares. Everybody's happy that I'm wrong. But if I'm right, well, everybody's happy that I'm right, or everybody respects me now that I'm right. My credibility is not destroyed. But you see, what I'm telling you that the bull market is going to continue, or that the bull market hasn't even started, that is a huge risk that I'm taking, because if what I'm saying never materializes and the bull market does not come, well, then everybody has a very good reason to be very, very angry at me, and I probably won't be allowed to leave the house. Because if I show my face out there, I'm not saying I got an audience that big. You only got about 500,000 viewers a stream. But if I'm out here saying that, a lot of people would be very angry with me if it never materialized that we had a bull market. And they'd have every right to be angry. So why am I so confident to get on here, practically dox myself by showing my face, and telling everybody, yeah, I think that the cycle hasn't started yet, and the real bull run hasn't even begun? What's making me so confident in that? There's one really big reason that I haven't mentioned yet. And I think I'm going to keep this one a secret for a little while. Like, when Bitcoin posts a new high and I'm proven right, I'll tell you what it is. I'll tell you what it is then. But until then, I don't want to spill the beans on this, because what happens is whenever I come up with a reason, the bears out there all come up with their own ways to take a dump on it, which is why I don't participate in too many of the daily spaces for our community anymore. Because I go in there and I say something that is hopeful and optimistic, and then all the bears got to tear it down and pee all over it. So I'm saving this one reason for why I am still bullish. There's the answer to your question, Ryan. Yes, I am still bullish, probably more bullish. One very good reason. I will tell you guys, when Bitcoin posts a new high, it's okay if you guess. If anybody can guess what it is, I'll send you a free copy of my book. So you throw your guesses in the chat there if you got them. But here's one reason right in front of you is what's going on with France. What do you think this leads to? I think it leads to money printing. Now, more stories on this here is take a look at this chart. What this chart tells you here is that the majority of altcoins are still in a bear market and have really been in a bear market this whole damn time. As this shows you that top 50 altcoins and their futures specifically are trading below where they were during the FTX crash. Majority of altcoins. If we were in a bear market, then I would expect this, yes. But also, if we're in a bear market, I would have expected us to not be in this until right now. But this has been true almost the entire year. I mean, did everybody just front run the final year of the 4-year cycle? Sure looks that way. But when you take a look here at the performance of the altcoins, it doesn't even compare to last cycle. And if it went all the way back to 2017, you'd see it doesn't even compare to the 2017 cycle when there were less altcoins. So no, altcoins have been in a bear market this whole damn time. Here's another thing here. Talking about the debt thing going on. We kind of have a debt emergency here in the United States already. You know what's going on here with this? What this chart is showing you? The United States is adding $400 billion worth of debt each month because the interest costs are so high. And it's not because the rate is high. Yeah, the rate is high. But the reason why the interest costs are really high is because the principal is high. I mean, I can pay 10% on a $10,000 loan, but I can pay that a lot more easily than I can pay 1% interest rate on a $10 million loan. That's the problem that the United States is facing right now, is that the principal on the debt is way too high. So because of this here, main way that they're going to get control of this, or have to get control of this, I mean, we're almost at $38 trillion here in national debt. That's atrocious. Especially at 4% interest rates. You know, it would be like the annual interest rate on that here. Maybe let's do a little calculation. So 38, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. 38 trillion times 0.04. That would be, oh my God, $1.5 trillion in interest each year. And it compounds. It compounds and gets worse. The only way you control this and get this back to manageable level, this is not manageable right now because this is 124% debt to GDP. Because this is not manageable, the only way you make it manageable is you inflate the money supply. Are you telling me that they're not going to do that? That they're going to let the money supply contract or just keep it right where it is and then keep adding $1.5 trillion a year, compounding each year of Trump's presidency to the point where it was like $3 trillion a year in $3 trillion a year in interest costs on the national debt, which is practically 10% when you compound. And you're telling me that there's enough money in the world to buy that, to keep that debt funded. Because you see, the real problem with treasuries is not so much that the government can't pay them back. The thing that they need to be concerned about is, can they continue issuing and borrowing? Because if they can't borrow anymore, that's when they really hit the wall and are in super trouble. Now, what this chart will show you here is that, well, there's kind of a reason why everything is going down right now. There's a good reason why everything's going down. And that's got to do with the credit creation. Because we say it's not just money printing that causes Bitcoin to go up, but credit creation is also another thing that causes it. And so far, credit creation has sucked. This whole year, it's sucked. Look at this here. Towards the end of last year, we had some really good times. I remember looking at the prices and being very happy looking at the portfolio. A lot of screenshotting of portfolios went on back then when there should have been some profit taking. But the reason why it was so good back then is because credit creation was going through the roof. That's why we had such an awesome new high in Bitcoin and new highs in a lot of other coins. We've been doing very good over in Pulsechain. Let's take a look here at those prices. Let's take a look at the Pulsechain ecosystem towards it was before the Interpol candle came out. It was like probably December 10th. It was December 10th of 2024. Things were great because credit creation was really good. Looky here, all the way up to December the 6th. I think that wasn't a new high. No, that wasn't a new high, but it was pretty high for Pulsechain though, to be up at 4 zeros and then an 8.7. So we almost took a zero off. We were so close to taking a zero off of the Pulsechain price. This is the reason why credit creation was through the roof. When credit creation contracts, when it goes down, crypto bleeds. Because crypto is the lowest liquidity asset. When you are reducing the liquidity from credit creation, as this chart shows you, you're hurting crypto. I mean, even look at it here. Down to April during Liberation Day. This was probably April the 2nd. We went down there too because credit creation went down. And it really threw the bond market into, it made it go haywire because it just didn't know what the tariff policy was going to be. We have another dip right here, which I think was probably in August. It was either August or September where there was a dip in credit creation. And there's one going on right now. And that's why we're down. When that trend reverses, we go back up. I have said this a million times here. I've said this so many stinking times. And I don't know why the bears don't acknowledge this. Because you see, I go into the spaces or I go into a debate with a bear. And I tell them, hey, can you tell me what it is that causes the crypto cycle to happen? Like what pushes crypto up? And this is what I hear. Or all they do is they just say, oh, the 4-year cycle. Okay, well, what causes the 4-year cycle? And they can't tell me what causes it. All they can say is, well, the 4-year cycle, it has to obey it. Is there perhaps something to do with what's going on during those 4 years that is influencing it to be 4 years, the past 3 cycles you have to look at? Is that possible?
A legitimate question, young man, deserving a legitimate...
I think that that's more likely, that the events and occurrences within those 4 years are inspiring what is going on with the price. It is not the fact that it is 4 years causing the price to do what it does. That would be like saying, oh yeah, Kevin Nash is 7 feet tall because the ruler made him 7 feet tall, or the yardstick or the tape measure made Kevin Nash 7 feet tall. No! The tape measure is just the measuring stick. The calendar, the time frame is just a measuring stick. It is not the cause of why things go as high as they go. You all, please spread this around here. There is cause and effect to these things, and part of the cause is credit creation, and that makes the effect of crypto prices rising. So we're going to pick it up here in a moment, but first I got a little public service announcement for y'all.
You're listening to a Reinvent Ideal live stream. The phrase Reinvent Ideal isn't just clever wordplay. It's a manifesto. For decades, society handed us a dusty old blueprint for life. Work 9 to 5, climb a corporate ladder, buy a house you can't afford, marry young, pump out kids, spend 40 years in a hamster wheel, and if you're lucky, retire at 65 with a gold watch and arthritis. That's the ideal we inherited, but it's a lie. A boomer-delivered illusion that made sense in 1970. But in today's world, It's a recipe for debt, burnout, and disappointment. Reinvent Ideal is the antidote. It's about rejecting the outdated script and designing a new one. A life where freedom, autonomy, and leverage replace status chasing and financial enslavement. Where your ideal isn't dictated by suburbia and social media, but what keeps you sane, sovereign, and alive. Instead of status symbols, we pursue rare and in-demand skills that buy independence. Instead of debt-fueled materialism, we choose minimalism, shedding liabilities and obligations. Instead of working to death, we embrace crypto and investments that multiply freedom instead of shrinking it. The new ideal isn't about fitting into someone else's mold. It's about building a life that maximizes your time, choices, and sovereignty. Reinvent Ideal is about giving yourself permission to redraw the map.
All right, we're back, and apparently Richard just tweeted here. We want to pull that up here. See, what did Richard start tweeting? Might as well look at it on this chart here since I already used this one. What do you got to say, good old Richard? He says, "At what point are you going to?" So, crypto Twitter. At what point are you going to publicly give us a shout out for having better uptime and reliability for 5 years? Now is okay with me. So here he is, kind of like trying to rub it in everybody's faces how Hex and Pulsechain are doing just fine while everybody else is sucking. All of these companies here are sucking and going down because of the AWS web services taking a dump. Yeah. So, no mention of anything going on with the SAC wallet. That's all right. That's all right here. I think that it's time to kind of really get that out of the public conversation. Because what should be in the conversation is this chart here. Everybody needs to know that it is liquidity that causes the crypto cycle to occur. And the coins that have the lowest amount of liquidity will be the ones that go up the highest. All right. I think I've kind of beaten this horse as much as I can here. Let's see, we already talked about this. There's another thing to talk about here is open interest soars in SOFR call options, or SOFR as I call it. The SOFR stands for Secured Overnight Financing Rate. And what people are doing is they want to buy call options on this, which just means that you're buying a call option when you think it's going to go up, and you want to basically buy dibs on it so you can buy it at a lower price when it goes up. It's a speculation derivative. And when these options are trading here, they're trading on Fed interest rates falling to 3.5% by year end, when we know that's going to happen at the very least. Pricing in an interest rate cut of 75 beeps. And when they talk about federal funds rate coming to 3.5%, I think that that's where we would end up on the lower bound of the federal funds rate. But I think that what these call options are about is they're thinking maybe there's going to be a 50 basis point cut at some point before the year is over. The Fed cuts more aggressively. That would be very interesting. Very bullish too, by the way. Very bullish, very interesting if that were to occur. Now, last story I want to talk about here for today. Typically, whenever I refer to quantitative easing, what I refer to here is this, the Federal Reserve balance sheet, also known as the money printer. That money printer is going to be the thing that causes the money supply to explode and cause those crypto prices to go up like they have. When you look at the money printer here and its history, what you will see is that anytime it went up, anytime that it stayed flat and did not go down, crypto prices went up. And that's throughout every single cycle. It's almost like it's a direct relationship. I don't think that this happens again like it has before. Like, I don't think we're going to see another 2020 uh, giant shooting up right there like it did back in the old days, like it did back in 2020. We're only going to see that if there's an emergency. Because even Stephen Miran says he doesn't want to turn on the money printer, meaning quantitative easing federal balance sheet. That's all right. See, you can see there towards the end of this chart, they've slowed down the pace of letting the balance sheet decline. And what we've heard is that they've paused quantitative tightening, which is letting the balance sheet run down. They paused it. So they may just keep it right here where it's at. That's okay if they do that, because throughout 2017, it stayed flat the whole time. We went up the whole time. We had a very nice bull run that whole time. That doesn't mean that there won't be money printing in some other way. Now, what are they going to do instead for the money printer? There is a couple of other options, but the one that I'm thinking is most likely is what's called QE for poor people. And what that is here, it's something that Arthur Hayes had written about. It's something that Scott Bessent is actually talking a lot about. And I think that's also why the Genius Act got passed when it did, why it was like the very first thing that they had talked about. They would refer to it as a variant of stealth QE. And what this idea does is it's not an official policy term by the U.S. government or Federal Reserve, but it is another way that they can print money that is just as good as official quantitative easing. And how it works is they issue a lot more treasury bills than other kinds of treasury debt. Treasury bill issuance kicks up, and it has kicked up recently. Just in Q3 of this year, total of $1 trillion of privately held net marketable debt in T-bills got issued. Now, T-bill, what that is it's a treasury bond that lasts just for 1 year or less. So it's all of these right here that don't really cost too much in interest. I mean, these are still high rates here for T-bills. I'm used to seeing T-bills at 1% or less, but 3.88 for 3 months or 3.6 for a year, that's less than the 4% rate we had seen for a long time on the 10-year. They like to issue these T-bills now because it has lower interest costs. But also, there's an economic context to T-bills that make it more for Main Street than for the big institutions. I hate the phrase where they say, well, I'm not here to help Wall Street. I'm here to help Main Street. Something that politicians say all the darn time because like it tests well with focus groups, I guess. But this is exactly the play here, is that if you did quantitative easing with the Federal Reserve's balance sheet, that's going to help out the institutions first more than anyone else. Whereas when they do a national debt surge through T-bills, that helps out the regular everyday people, Main Street, or poor people, or small business more than the big institutions. That is what Scott Bessent and Trump want. And here's how that works out here. When you issue a lot more of these T-bills, well, those rates on the T-bills come down because the supply of them is greater. T-bills are more likely to, their rates are more likely to reflect supply and demand than, say, a 10-year does. And because the rates are low, and it's very easy, there's many of them out there, banks are going to be the ones buying these up. Banks will be the ones to buy it up here because they want to have as many of these T-bills as they can. It's very risk-free for them to get into it. It's risk-free for everybody, but it's extra risk-free for the banks for them to make some easy money. They will snatch up a lot of those T-bills that get issued. And because they got so many T-bills in reserves, they're able to buy them with money that they actually printed. They have the right to do that. A lot of these commercial banks and even regional banks, like the ones that are in trouble right now, they're able to print money to snatch up these T-bills. The government is okay with them doing that because it keeps the national debt funded and keeps the money rolling into them. When they got all these T-bills as an asset on their balance sheet, well, then now those banks can take on more liabilities on the other side of the balance sheet, meaning they can loan out more money. They can loan out more money, and they want to loan out more money because the asset that they have on their balance sheet, the T-bill, which is paying a lower rate now, they want to make extra money through the rate spread or the interest rate, the yield spread, which means they will lend out the money at a higher rate than what the T-bill is paying, and they will pocket the difference. So if we issue out a lot more T-bills, that is just as good as quantitative easing, Federal Reserve money printing through the balance sheet like we're used to seeing here with this. It's just as good as this here. If there's a lot more T-bills out and commercial banks and regional banks are buying them. That's why Scott Bessent, previously he was against issuing lots of short-term debt, but now that he's in charge, he's in favor of short-term debt. He's issuing a whole bunch of it. It's all over the place. Like he just can't get enough of it. He criticized old Janet Fallon Yellen for doing that, but now he's doing the exact same thing. Like he just can't control himself.
Control yourself!
Come on, Scott. What are you doing? I thought you were against all this. No, he's all for it because that pumps money into the economy and allows other banks to do the money printing. That way, we don't have to put as much pressure on the Federal Reserve to do the money printing. So this is probably their backup plan just in case they can't get Lisa Cook off of the Federal Reserve Board of Governors, in case they're stuck with her, in case the Supreme Court were to rule against them. And also, just in case there's no emergency that demands they turn on the Federal Reserve balance sheet. Turned on quantitative easing through Federal Reserve. All right, almost done for the day here. If you guys got questions, get them in right now. Let's see, a few other things I wanted to look at. Yeah, definitely want to look at this chart here. Let that load. But here's like where the story comes from. That the T-bills are definitely intensifying their issuance here. And it's pushing the Fed towards quantitative tightening endpoint. I mean, for the most part, like the way that they have been issuing a lot more T-bills, that is actually responsible more so for quantitative tightening coming to an end. Because, Jerome, he wants to keep the quantitative tightening going. He wants to reduce the Fed's balance sheet. As of this story here, it says, as of mid-October 2025, the financial landscape is grappling with the dual forces of robust government borrowing and the central bank's effort to shrink its balance sheet. This dynamic interaction is creating a delicate balance where Treasury's financing needs are effectively doing some of the Fed's tightening work, but also introducing new pressures on market liquidity, compelling a closer look. So basically what's happening here is that the Treasury General account is going back up. Its reserves and its deposits are starting to stack back up here again. When the Treasury General account is filling up, that is taking liquidity out of the system. So that's another reason why crypto is down right now, because the TGA is being refilled. The reason it's being refilled is about that whole big, beautiful bill gave them the authority to issue a lot more debt, and they issued it all through T-bills. They raised the debt ceiling by $5 trillion, and they will spend all $5 trillion of it. Taking the national debt all the way up to $41 trillion. They will definitely do it. You can believe it. So, it strategically prioritized short-term T-bills over longer-term debt, One, because the interest rate on longer term debt is much higher. But then two, it's also for the fact that it counts as a form of quantitative easing. It's gotten the Federal Reserve to stop with their quantitative tightening, or is getting them to stop with it. The winners of this going to be commercial banks, as they say here. They're going to do very well. Companies with strong cash positions, they will do very well. Ones that are going to suck here would be like the growth stocks, sensitive discount rates, and highly levered companies. They're not going to benefit too much from this here, so we're kind of punishing the people that took out too much debt. All right. Here's another story that proves what I'm saying is true. Bitcoin and Ethereum are leading the crypto sell-off. God damn it, Forbes. Why do you have so many pop-ups? Because of a credit crunch. Credit creation is another thing that causes crypto to go up. The more credit we create, the more our prices pump. The bears don't ever acknowledge this. They say, oh, it's just time that tells crypto what to do. No, it's not nothing to do with time. It has everything to do with liquidity, with money printing, and with credit concerns and credit creation. Credit concerns expressed by regional banks over the last week has caused Bitcoin and crypto to suffer because it looks like these regional banks are not going to be issuing a lot of credit. They got a lot of bad loans on their books that are going to be under scrutiny. They won't be able to issue a lot more loans because the loans that they have on their books right now suck. That is a pinch on credit. That is causing crypto to feel a pinch as well. Somebody please get the bears to acknowledge this. Now, that pinch is a temporary problem. But the long-term problem has got to do with the federal government's national debt, which is going to force a lot of these central banks to have to print money to buy up a lot of that debt. We've kind of covered that before here. Let's see. I think this story covers that as well here. So we don't want to go over it 15th time here. But we should also pay attention here to this. What Arthur Hayes has said about it is that he even calls it QE for poor people. It's time to create credit and lend to U.S. industry is what he's saying here. What he's talking about there is what I was just talking about, that if you issue more T-bills, that unchains the banks to go issue out a lot more debt and loan to small businesses at lower rates that they can afford, rates that make the loan profitable for the bank. But also, when those rates come down, it's not that people are going to be buying houses and taking out mortgages. It's that people that already have houses got a lot of equity in those houses because the housing prices went up really high. And since they can't sell their houses and realize that, you know what they're going to do? They're going to take out a second mortgage, an equity line of credit, to pull out some of the money from their house and go spend it. We get those rates down. That's why these interest rates are so important. All right. I see some questions coming in here. Don't worry, guys. I will cover them. I will answer all your questions. But there was one other thing here we wanted to show y'all. Things that matter the most when it comes to crypto. What you should be watching. Global M2 creation, or a global M2 money supply. That's just how many little units of currency are circulating all around the world. That tells you how high we're going up. That tells you what money printing is doing. I mean, look at this chart right here. This is just comparing it to the S&P 500. When they print all this money, that money needs a place to go. Where does it go? It eventually ends up in the hands of somebody who wants to save it. And when they want to save it, how do they save it? They put it into financial assets, or they put it into the bank, and the bank puts it into financial assets. This chart proves that I'm right. Good God, will the bears look at something like this and tell me, why am I wrong when I got all this evidence here that says I'm right. What is wrong with all this evidence that I've got? Will you please tell me what am I missing that you bears apparently know so damn well and know it's so much better than me? Can you show me where am I wrong? This is what I hear whenever I ask that question. All right, I've shown you the proof. Credit creation, money printing is what's pushing those prices up. Where am I wrong in my analysis?
A legitimate question, young man, deserving a legitimate answer.
Where is my legitimate answer from all you haters, from all you bears? Come on the program here with me. I'll have you on for the whole 2 hours. You can co-host the show here with me and tell me why I am so darn wrong and why this time it's different. The bear market starts now. Or this time it's not different. Bear market starts now because it has to because of time. Somebody can do that. Great. And if you guys know of any bears out there, tell them, hey, I want to have you on the program here. I'm inviting you on. Explain to me why I'm wrong. All right. Oh, you know what else here? If anybody's got connections to Professor Lamont Black, I would love nothing more than to do a stream with Lamont Black. I would love to interview him. I guarantee you, if he had him and I on the same stream, you guys would learn more than you've ever learned in your entire life. All right, you'd learn more listening to the two of us, listening to me interviewing him, than you would ever learn in 8 years of finance PhD at a university. I promise you that. But what I wanted to show you here with this chart is darn it. Maybe reload that. All right, what I wanted to show you here with this chart. Another reason why it's slowing down is this. What it's more sensitive to than the actual creation of new money is changes in the pace of money creation. That has greater sensitivity than anything else. And when we take a look at so far this year, I mean, we didn't have a lot of money creation on the global scale. Coming up here, beginning of the year was a pretty tough year. It really stunk. January and February really stunk. Things did get a little bit better after getting through April. But so far, for the most part, there has not been a lot of money creation this year. That's why it's slower this year. So even though Bitcoin is up 200% in the year 2023 and 200% in the year 2024, but it's only up, 7% so far this year? Is that the year to date? I think it is. The year to date return on Bitcoin, it's not that great. It's only like 7 to 10% maybe. Where did it start for the year? Like, why is it not doing so great so far this year? That's the reason why. There just has not been a lot of money printing. Why is that so hard for all of my bears and haters to say? I mean, here it's practically flat. Practically flat here. It's only up like maybe less than 5% year to date. Or no, it's up about 10%. It started out in January at about, it was about 94,000. A little over 10%. About 15% is what it's up so far this year. Why is that the case when we're getting close to the end of the year and previous 2 years it was doubling. It was doubling at least by the end of the year. Why is that? It's just not been a lot of money printing. We take a look at it here. China's the one doing all the money printing. They added 47 trillion wons to their circulating supply, or the equivalent of the wons equivalent to $47 trillion. Japan only added $8 trillion to their economy this year, to the circulating supply. The Eurozone, I mean, they have been kicking up the pace of it for sure. But still, it's only $18 trillion worth of euros. And then here in the United States, this isn't even the printing amount here. This is just the total amount that it's grown to this year. So I'm sorry. Japan didn't add $8 trillion. They just have $8 trillion. Same with China, they didn't add 47 trillion. They just have 47 trillion. And here in the Eurozone, it's just 18. And here in the United States, it's 22. How much has it been growing over the course of this year? And here in the United States, the money supply is actually contracted in a year-over-year growth. And then in the Eurozone, it's only up about 0.35%. Year over year in China, it's actually down almost a whole percent. And then in Japan, it's practically flat. So the money printing that's occurred so far this year hasn't even been 1% increase in the change of pace. Because that's what this Z-score is measuring here, is the change of pace. So when you look at that, it's not anything to write home about. That is why everything is sucking right now, and it's not doing so great. If we take a look at bank lending, it's the same story. This is credit creation is what it's talking about here. And with this, you got some real estate loans that were created, and it says like a total of 5.6 trillion in mortgages outstanding or real estate. Some commercial lending is going on, but it's lower than what it was come, when was this? May the 6th, 2020. Still, it hasn't even surpassed that. And let's see, this other one here, consumer lending. Lots of credit card usage going on out there, but it's lower than it was at the end of last year. The total credit creation is lower than it was at the end of last year. Why is that? And when we look down here, it's been contracting almost all year long, even for the past 2 years for the most part. It's been contracting the whole past 2 years. This is why I say, the bull market has not even started. Because what causes it is credit creation. That was what was happening all throughout 2021. This is all just reflecting the change in pace in it here, though. Let me look at that. And since we haven't had much credit creation going on, there's not a lot of bank lending going on, there's not a lot of money circulating through the economy to eventually end up in the hands of somebody who wants to save that money and stick it into financial assets. And that's also reflected to where we judge ourselves to be in the overall business cycle and the overall market cycle. Because here, on this chart, let's see, does it let me zoom in? I don't think it does. Yeah, it doesn't really let me zoom in here, but as you can see, we're just above the line that determines whether we're in an uptrend or in a downturn. We're just above it. So that is that's very early in any sort of business cycle. Right? Still pretty early in any sort of business cycle. Whether they say, well, that could be mid-cycle, right? You could say it's mid-cycle. But that means we're not even halfway there. Practically a little either right at halfway there or less than halfway there. So anybody telling you that it's all over, you got to tell me, how are we going to have money sloshing around, circulating throughout the economy, and businesses making money, people bringing home bigger paychecks and everything, maybe even some stimulus checks going out, money printing going on, credit creation going on. How are we going to have all that going on, and nobody wants to save any money at all and put the money into financial assets? You're telling me that people are going to have more money, but nobody wants to save any. I mean, what are they going to do with their extra money? Are they just going to throw it in the fireplace and set it on fire? So I'm begging one of you bears that are just so smart, come on here and tell me why you think I'm so darn wrong. Anyone? All right. Oh, let's look at your questions, guys. Do you think we'll ever get back to having worthwhile yield via T-shares in HEX? Currently, having stakes is mostly only beneficial for collecting emergency end stake penalties from others. Okay, Tabla Roos asks that question. Yeah, I mean, like the current rates are not permanent. I don't think they're permanent. And also, the rates, the staking that occurred, I don't think that the origin address stakes are going to see through to the end. All right. I don't want to speculate on what I think is going to happen with those, but I just don't believe that they want those staking rates to be low forever. But it's something about DeFi that we all got to accept is the rates are never fixed. They can always go down, they can always go up, no matter what tool we're looking at. If we're looking at a staking pool, if we're looking at a liquidity pool, those rates can change, and they frequently do change. They're low right now because so much of the origin address hex is staked. I think we could see emergency end stakes from the origin address. I don't know when or how much, but I don't think that they're going to live out the entire stakes. Just don't see that happening because it just makes, unless there was a reason unless there was the hex price went up and stayed up a lot higher than it is now. That's possible. That it goes up and stays up and a lot higher than it is now, because that increases the yield if the price goes up. Right now, the yield sucks because the price is low. I don't think that it's going to be permanent. Don't know when that will change, but I do believe it will change. Tablarus also asks, if we finally see true quantitative easing from the Fed and the other major banks, how long does it take to get to crypto and altcoins? A few months? Yeah, it's going to take time. Once they turn on those money printers, it will take time for that money to end up in crypto. But here's kind of how it works is like, there'll be a lot of people rushing to these altcoins, rushing to crypto because they want to front run the new money getting here. There'll be a lot of people that want to front run the new money getting here. That causes the first wave up. And then when the newly printed money finally does get here, that pushes it up even further. And that's how like the real bull run can last for up to 6 months. That's what causes it there. There's people that want to get in now because they know that the money printer just got turned on and it will take a few months. But hey, it's a lot easier to wait 6 months to make money than it is to wait 5 years to make money like the rest of us people who bought at the bottom of the bear market of this past cycle. All right, everybody. So that's all the questions that we got here for today, and that's all that I've got for today. We'll probably do another stream this week, but next week we'll be doing a lot more streaming because we want to cover the Federal Reserve meeting on the interest rate cut. See you then.
That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here.